Let's start off with the Naira, relatively flat against the US dollar, given the fact that, of course, we saw the MPC rate decision yesterday. Basically, no surprise there on the interest rate front, but of course, the verbiage coming through from the governor, quite important in terms of investment opportunities going forward. What did you make of the news, and how did it affect trade today?
Well, the news was pretty much as expected. There were no surprises. We pretty much thought that rates would stay stable or rise a bit because of the amount of liquidity in the system and the fact that the central bank is doing inflation targeting and needs to keep inflation under control. For the past couple of months, inflation has been moving the opposite direction to what we want to see in the country. We're looking for single-digit inflation rates, and we seem to be trending more into 14%. So we quite expected that the rates would stay stable.
Well, Kubi, let's touch on that. I mean, you're talking about single-digit inflation rates. Is that a possibility in Nigeria, and when do you think it'll happen? It seems that most analysts say that 13-14% level is going to remain relatively sticky for time to come.
I agree with that analysis. If rates are going to come down into single-digit, it may not be before the elections. We're expecting elections in the second quarter of 2011, and there's going to be expansionary government spending until that time. So if anything is going to happen on inflation rate, it will be much into the second half of next year. For the rest of this year, we may see a moderation down to 12% because of the CPI, the composition of the CPI and the improvement in food prices, a slight reduction in food prices may see us seeing 12%, but we're not likely to see sub-11, sub-12 levels for the rest of this year.
Well, Kubi, I mean, looking at the exchange rate, I mean, you know, not the exchange rate, pardon me, the interest rate, 6.25%, isn't then the solution to bring up the interest rates even further to try and tame inflation, or do you think that's going to create a very big shock for the Nigerian economy?
Well, the central bank has to do a balancing act between keeping inflation in check and ensuring that the banks lend to the real sector, because one of the other policy thrusts is to ensure that credit to the real sector grows. So if you look at the voting at the meeting yesterday, it was a 6-4 vote. It was a close call, which means that we may be looking at an interest rate rise in future. But then again, there has to be a check between what we want to do for inflation and for liquidity and ensuring that the real sector continues to grow, because that's very important to any country. However, the fact that the deposit rate, the rate at which the central bank will take money off the banks, has gone up by 100 basis points, tends to encourage the fact that rates will continue to move north. The last MPC meeting in September, there was a significant shift upwards in rates, and we expect that even with this, there might still be some pressure on rates to move upwards, because other government benchmark rates, the bond yields and the treasury bill rates have also been trending north. In fact, we're seeing treasury bill rates in double digits for the first time in about 2 years.
Kubi, let's quickly touch on the fact that Governor Sunusi was warning about public borrowing and the fact that it's growing quite rapidly versus the likes of corporate borrowing. How do you think the central bank is going to balance this out? Do you think that a balancing act needs to occur?
Yes, a balancing act does need to occur, but then again, it gets difficult to manage these things in face of elections. There's obviously going to be a lot of spending. We have a consensus candidate for the North coming out to contest in the primaries against our incumbent president. Both of those, there'll be a lot of spending going on from both camps until the primaries are done. In every single state in the country where governors are up for re-election, there's going to be a lot of spending. So even though the CBN really wants to manage government expansionary spending, I think it's going to be a tough call. However, for the corporates, they've done a lot in terms of stimulating credit to the private sector. They've done a lot in that regard. In terms of the fact that AMCON is coming on stream, the fact that bank balance sheets will be liquefied means that there will be increased credit. They will have increased room to lend to the corporate sector. So that will happen. The fact that rates, at least rates should be in the single digits. They've managed to moderate rates at which banks can lend money to corporates. That will also help. So they've done a lot in terms of that.
Kubi, sorry to interject that. Looking at the Naira going forward, where do you peg the Naira? I mean, we know that Governor Sunusi was talking about a stable exchange rate, and given the fact that the inflation outlook perhaps doesn't look good as one might have hoped, and then you've also got the elections underway next year. What impact is that going to have on the currency?
Well, one of the things that the government has succeeded in doing is easing the fears around the currency. They've promised a stable exchange rate. They've been able to succeed with that. We're still seeing 150 levels. They took some very serious steps some weeks ago to curb the panic in the market. They've made sure that they've met demand. We've had just moderate depreciation in the Naira, 9 kobo and then I think 5 kobo this week. So it's been pretty, they've done a lot of work around that. I stuck out my neck earlier in the year and said that they would maintain the plus or minus 3% of where we entered the year at, and I think they will do that. Fantastic.